The oil prices has risen modestly in previous trading sessions back from low 42, but we're still stuck in a narrow range, and even that we're still in the summer driving season. So how hard for oil prices right now to break out 50?
Well, you know what it is? We have points where the production increases once we get to a certain price point. That will continue to keep a level on oil prices for the near term, and until we have some sort of breakthrough as far as OPEC and them cutting back even more production, you probably won't see any major price rise.
So the EIA reported that the summer driving season starts from the June to August. Now we are in the mid-July. So by the August this year, would the oil price be able to just touch the 50?
It might. This has actually been, from what I've read, this has been a very busy driving season. People are taking advantage of the low-price oil, but it's not really taken up that much slack in the oil market. So, once you see the petroleum refiners switch to the heavier crude and start producing oil for fuel oil, there might be a shortage. There might be a small bump in it, the price for a short term. Other than that, there's not really anything up, that we can see is going to make, the oil prices go through $50.
Now, in the big picture, the rise in the U.S. drilling activity has clouded the future of the supply outlook. So do you think it's going to take much longer than we expected early this year to achieve the balance of the oil market?
Well, I think that you want expansion in China, you want expansion in India, and you want expansion in the U.S. And with the modest growth in the U.S., China's still struggling to get back to that 6% level of growth. So, it's about growth. It's about the demand now, not so much the supply. The supply is very well, it's figured out. Now it's the demand that's just not meeting, production levels. So, until you get that growth that the U.S. is expecting and China's expecting, that demand part of the equation is not going to equal out. Well, I mean, I would like to think by the third quarter you'll start seeing the demand both in U.S., China, and India, and Western Europe start picking up. And if we have a colder winter, that will definitely increase demand.
And also another part is that OPEC signaled that they may widen its production caps to include Nigeria and Libya. But most analysis on the street and the CME both would like to just ignore them, saying that no worth to take their opinion. So what is your opinion on that?
Well, my feeling on Libya and Nigeria is that they may be included in this cap on production, but the Nigerians are notoriously bad about keeping, the limits. When they have an opportunity to expand, they're going to expand. If the markets call for it, they will produce more oil. Doesn't matter what OPEC says. And Libya's a wild card. They have in the past followed the OPEC restrictions and whatnot. We're assuming that they probably will, but it's more about Nigeria. Nigeria can definitely ramp up production. Well, I mean, it's 5 years ago, OPEC, they ruled the oil market, and the oil market was extremely important. But now, you have Russia, you have Venezuela, which is, God only knows what's going to happen there, and the U.S. is producing more oil. So, yeah, I mean, OPEC's power is still there, but it's nowhere near what it was. So, trying to recontrol the market, I think they're having a difficult time with it. And I think it's going to end up hurting them because their revenues are down. And there's always opportunities to trade oil, and I think that OPEC, if they don't do something drastic, then we're going to be in the same particular trading range that we're in now. That trading range being $40 to maybe $48 a barrel, which is a very narrow range for oil, and you'll probably see that continue. If something drastic doesn't come out of the OPEC meeting, you'll probably see that continue. Yeah, I think that probably would be through the end of the year. I mean, the only thing that would change that is a colder winter, which you never really can predict, and the increase in demand in the U.S. and China. And that's something we're hoping for. I mean, everyone's hoping for increased demand. So that would be something that would probably put a little upward pressure on oil.
Take a look for the good market and good prices just give up recent gains today as the most investors awaited the Janet Yellen's testimony to Congress for cues of the time of interest rates expected. So what is the outlook of the good price?
Well, for gold, I mean, it's I got to look at it. Yeah, it's very narrow, you know, and unless I think the bigger issue would be something in a geopolitical event with North Korea. I think that would change it. That would also put a lot of upward pressure on it. So, if nothing happens, even with Yellen's, yeah, I mean the dollar is it's 95 and change. It's been a little bit weaker. If there's some more strength in the dollar, you'll see gold, but. Right now, you're not seeing anything. As a matter of fact, this is almost like a traditional summer period where not much is happening. You look at equities, they're not really doing much. You look at the gold market, you look at oil, it's really not much going on. So I'd like to be creative here, but I really can't. I don't think you're going to see a whole lot of movement in either direction.
So for most investors right now, it would be better to just hold.
Yeah. Stay, hold, and if you have an opportunity with a little bit of a dip, maybe you buy on the dips, but I wouldn't go crazy because I think that in gold, I think there's a much bigger risk.